Hey boys, welcome to the mental illness. Jesus Christ, this market is out of control. I hope you guys are all safe. This is the highest level of mental illness. We're going to hit all-time highs pretty soon, man. I've seen illness, but this is next level. Okay, we're going to try to do a chart here and some TA, but honestly, in this market, TA means nothing. This is just manipulated cockery going on right now, dude. All right, let's look at PEPE, man. I've been hunting this for weeks. I can't even tell you how long I've been waiting to get in for a nice long, because I think there's going to be a big upside to this one and one final exit pump for whoever is manipulating this asset. But let's begin. So the first thing I'm looking at here is we have a harmonic structure, right? On the daily, you could see a very clear shark pattern. Here's your first impulse, your corrective wave below the 50, above 382, and then pushing out to the 113, completing the wave structure down here in the PRZ at 886. The reason I expanded it into the green box is the 1618 of the B to C push ends at the top of the box, so that's where your first potential target would be. And then the deep target is the 886 down here. So anywhere in here, you want to see a big buy wick, which we had. And then you want to see stabilization in the zone. And at the very worst, maybe they take out this wick. And then I'm looking for a reclaim of a key level right here. So I'll show you that in a minute. But the main thing, or the main reason why this level got bought back, is you could see there's a daily order block. So you see that last down candle here before they cleared upside liquidity and rebalanced over here and then pushed up with energy. So this is going to be your untested daily order block. Now on the way down, you could see it tested it here and got a really nice reaction. So if you go from wick low to the high, 23%, which is validating this as an order block. The only challenge is that wick went all the way to the bottom of the order block, so maybe all the resting bids got filled. And if that's the case and it doesn't find continued support or a new layering of bids over here, the challenge then becomes they're going to be targeting equal lows here, and that's going to be major sell side liquidity to the downside. So anyways, this is the harmonic structure we're looking at. Now this could roll into a new harmonic structure that I have here. So the way harmonics works, you'll get, after the completion, you'll get stabilization, and then you're looking for another wave structure to emerge out of this wave. The only one I see right now that's valid would be this lower low rolling into a shark, where basically you got the 5-0 retracement and then the lower low at the 113, and then a push up to the 886, and you're going to see your B to C projection is around the 1618. So this is as valid as it gets. It's actually textbook. Now, if these wave structures actually prove to move the market, you got to ask yourself, how do they overlap with liquidity? So I have a liquidity model here. Again, we already identified the equal lows. So if this area you don't get stabilization with the harmonic pattern reversal zone, they're going to target the equal lows. And then you'll have another opportunity to bid down here. But again, don't blind bid, wait for that stabilization structure. So when I say stabilization, I mean comes down and then reclaims. So that's pretty much all I'm looking for. I don't want to catch knives if it's going to go down to here, because you never know. Then it makes all-time lows and goes straight to zero. So on this liquidity model, the way we approach liquidity is on the weekly. So this is a relatively new asset. Again, it's been straight down from launch, which is normal. You had the, I guess the early investors, or the people who control the asset, they all had time to accumulate and then pushed it up and got retailed of FOMO in at the top and then dumped on their heads. So what we're looking at now is the internal to external liquidity model. The way that works is you'll see on the weekly, it'll hunt external liquidity, which was right here. And then you basically took that range high out, and now you're targeting internal range, which is going to be this weekly imbalance right here. So now this has been satisfied, the weekly liquidity objective. So now you're looking at the daily. Daily, you have an external high here. So after filling the weekly, it went in and took the external range high on the daily here. So now that we dropped it in the daily, what are we looking at? We're looking at internal range right there. So that's your daily imbalance. You could see it wicked it. So now if this liquidity model holds true and the algorithm is always hunting liquidity, the next step after taking internal range is taking external range, which would be these highs right here. And because these highs are relatively equal highs, you're looking at the weekly, this cluster for the external range. So for me, the drawn liquidity to the downside has been fulfilled in the internal range here. And now we're looking for external range. What you do want to see is the stabilization here, and it looks pretty bad. Like the daily RSI is now pointing down and it's in bearish control. So what you do want to see in this range is seller exhaustion. So you can see from this drive here, we have a lower low on price and we have another lower low here. But when you look at the RSI, you have a low and a higher low, and now we're kind of breaking below it. So unless in the next day, day and a half, we start getting buyers stepping in and this starts curling up again, until that happens, this is not going to be Class A bullish divergence. So I want to see in the next day to 36 hours buyers stepping in and pushing the price. Unless they do, this is still going to be targeting the external lows. So let's see how this rebalances over here. The entry model I'm using is basically you have this gigantic wick over here. I use a 1 hour wick and take a fib from the wick low to the wick high. This is your golden pocket, right? So I started to enter more or less right here because I saw it was kind of basing. Like even now it's kind of looking good, right? They've taken out these lows, they've broken low time frame, or they've shifted low time frame structure, and now you're trying to see if it honors low time frame PD arrays, bullish PD arrays. And right here, this 5-minute candle would be effectively an order block. It's the last down candle that took liquidity in the area of interest. And you could see it pinned it right at the top and held. So as of now, again, this is only a 5-minute candle and BTC could dump at any moment and this thing would just collapse, right? But if real, like classical TA holds, this could be, you know, the beginning of the reversal. I'm not saying this is the reversal, but it could be the first step of a consolidation and then a move up. So let's see how this evolves. My other entries are going to be at that golden pocket of the wick, and I might even ladder in a little bit up here as well. But if it comes down, I'm looking for this to be a protected low right here. So I want this to hold. Otherwise, on the daily, if that doesn't hold, I have no doubt they're going to be targeting these lows right here on the internal structure. So let's see where this goes. But hopefully we get a nice long. All right, boys. Cheers.